Are the Bitcoin miners still a 3x or more leveraged play on Bitcoin? Let's find out if that's still the case or not going forward into the next bull cycle here that we are currently starting up right now. Before we get going here, please subscribe and like this video. That would be super helpful to the channel. It helps more than you can imagine. I would greatly appreciate that. All right, anyways, moving on. So generally, we correlate the Bitcoin miners with a leverage play on Bitcoin. Lately, we've been seeing a bit of a drop off in that dynamic. There's a few reasons why, and the question we're going to ask ourselves now is, are the Bitcoin miners still a leveraged play on Bitcoin? Now, this is an article back from 2021. Talking about the correlation between public mining companies and Bitcoin and how they have a strong and steady correlation. Now, we have been seeing that erode a bit of late, and there are some very big reasons for that, but this is just an old article I wanted to bring up and show that's not necessarily relevant in this particular cycle, but it is showing what the history was, that these things used to be very, very closely correlated with Bitcoin and would move up and down with them, and they would do so at a high beta rate, which means that they would move more. And some would move more than others, like Bitfarms would move more than RIOT, Mara more than Bitfarms, Hive more than others, BitDigital more than all of them at 0.83. With their correlation, and you can see some historical charts showing that relationship. So let's take a look at this one here. So this came out actually 3 days ago. Here's why Bitcoin miners stopped rising with Bitcoin prices. Now, I don't necessarily agree with everything in this article, but it is interesting nevertheless. This is on Market Beat. So the positive correlation between Bitcoin miners and spot Bitcoin prices. So there was a positive correlation, just like with the old article we were reading here, right? Between the direction of Bitcoin prices and Bitcoin miners. The momentum totem pole usually starts with Coinbase, followed by Marathon Digital, Riot Platforms, and then down the line. And that dynamic changes depending on which miners are in favor at the time. So like right now, CleanSpark is actually getting like a lot of the big movements, and not Mara or Riot nearly as much. I mean, CleanSpark moved twice as much as Riot yesterday. So the logic was that spot Bitcoin prices would rise, meaning that their network fees would increase, that their treasuries would increase in value, and all that would um, trickle into an inflated or leveraged move on the Bitcoin moves. So we got a negative correlation recently. We'll talk about that. The day correlation died. This is where I don't agree. I don't think that this is true at all here. We do know that there was profit taking from insiders at this point in time. Profit taking, from anyone that's been holding since a year ago when they're up 600%. It's just crazy not to take some profit. Also, there were a lot of shelf offerings on the table, and we were hitting highs on February 28th, which would have been a very strategic and intelligent point in time for the miners to use some of that shelf offering and do some fundraising using those shelf offerings, given the fact that the interest rate environment is so incredibly aggressive against them, and they are small companies. They are sensitive to interest rates. So I don't think that was the death of correlation. I think that was some profit taking after massive run-ups, possibly some dilution at strategic points in time. And this I just don't agree with. Okay, that's all. So basically, the other thing that they're saying that this correlation is dying is because of the halving, and that they get paid 50% less for their work every halving. And as that goes on and on and on, they're losing 50% of their revenue every 4 years until until eventually there's no more Bitcoin to mine, at which point they are purely supporters of the network, and they only benefit from network fees and a treasury of Bitcoin that they hold at that point in time, meaning, in their opinion, that the correlation will slowly erode further and further until there is no more leverage on these companies compared to Bitcoin going forward. Okay, that's what they're saying. So now we're going into what I'm going to be saying here. So MicroStrategy. MicroStrategy has taken away a lot of the momentum that these companies were getting in terms of their leverage on Bitcoin. And the reason for that is because MicroStrategy has no exposure of risk to the Bitcoin network or to the halving. They only make money off the halving. They don't lose it off the halving. Like, they don't their holdings of Bitcoin are completely unaffected by the halving, whereas um, the underlying business of the Bitcoin miners is potentially completely disrupted by the halving. The other thing is that MicroStrategy has found and has been um, exploiting what some are calling an infinite money glitch. So what MicroStrategy has been doing is, so they've been holding Bitcoin, right? Bitcoin went up big in value, which inflated the value of their balance sheet and of their company as a whole. So their stock goes up. Now, once that value goes up, Michael Saylor, he goes out and he offers what's called like I believe it's executive notes, I think is what they were saying those were. Basically, it's like a very low cost debt instrument for Michael Saylor. It's less than 1% with a 6-year repayment period where he is able to borrow for basically for free hundreds of millions of dollars, with which he turns around and buys Bitcoin, which goes up in value, which increases the value of MicroStrategy, which enables Michael Saylor to go back to the equity markets and take more almost zero cost debt to buy more Bitcoin with. And he just keeps rinsing and repeating that over and over again. And that's how he's keeping up with Bitcoin spot ETFs and taking away some of that leverage that we were getting on the Bitcoin miners and transferring that leverage to MicroStrategy. So that's something that has been happening and taking away from that. The other thing is, this is on X here, BitMEX Research, the spot Bitcoin ETFs. They've been taking some of the money that would generally be flowing into the Bitcoin miners and just going directly to Bitcoin. So we've seen net inflows of $11.4 billion since January 11th of this year. We have flipped the market cap of silver already with Bitcoin after these ETFs came out. IBIT, I believe, is the second most liquid ETF in the world now, just since January 11th, which is absolutely insane. It takes ETFs years, sometimes decades, to get to that type of a level. And the spot Bitcoin ETF from BlackRock has done that in just a few months. That's absolutely nuts. So the issue is twofold. We've got spot Bitcoin ETFs taking away some of the leverage that we were getting on the miners before. We've got MicroStrategy hopping on the bandwagon and getting significant leverage on this run up on Bitcoin in their own stock. And at the same time, we have the halving suppressing some of the price action in the Bitcoin miners, at least until after the halving, when these companies prove whether or not they can continue to survive, given the new environment that it currently is uncertain. So will we see a leveraged play off of the Bitcoin miners compared to Bitcoin? Now, this is a chart. This is a bit of a visualization of all the things I was just saying. So Bitcoin is the big, thick, goldish orange one here. MicroStrategy is the green one. CleanSpark is the blue one. And then Mara and Riot, Riot, I think, is the pink one. Yeah, Riot is the pink one. Mara is the white one on this chart here. So you can see this is since the bottom of the market in 2022. Since the bottom of that market in 2022, Bitcoin is up 189%. That's pretty good. CleanSpark is up 329%. So about 2x that, right? A little more. MicroStrategy, on the other hand, is up 431% in that same time period. Whereas Riot and Mara are only up 50 and 59% respectively there for those two. So is the leverage play still in action? And my answer is, with some miners, yes. With some miners, no. And MicroStrategy is getting a significant boost from having no risk going into the halving. So I do think once the halving is over, we will see some of that high beta come back into play. We will see these miners react to the price of Bitcoin more in a more exaggerated way like they were in the past. I do think that will return. I don't think that it will be like a 3 or 4x like it used to be, it might be closer to like a 2x or like a 1.5x compared to Bitcoin going forward, given all of these new instruments that allow people to get Bitcoin exposure. Because in the past, it was only the miners. Now you have MicroStrategy. Now you have the spot Bitcoin ETFs. Soon you'll have options on those ETFs. That's going to take even more capital away from the Bitcoin miners. The other aspect, I think, that will decide whether or not a Bitcoin miner will be benefiting from that leveraged exposure to the Bitcoin movements is whether or not they have a treasury of Bitcoin and how big that treasury is. Currently, Mara, by a large margin, has the biggest treasury, and I do think that they will benefit the most from that treasury after the halving, assuming that they get some profitable quarters, with Bitcoin being, as high as it currently is in price. So my answer is yes and no. I think some miners will probably go out of business after the halving. Some, it's inevitable, some will. I think those that either aren't producing enough Bitcoin or don't have enough Bitcoin on their balance sheet, probably aren't going to get nearly as much of a benefit from having that Bitcoin exposure as some of their competitors. I do think that those that are strong performers, those that have large Bitcoin treasuries, and those that keep their an efficient operation of mining Bitcoin. I think if those that have those three factors in play for their stock, those will maintain that leveraged exposure to Bitcoin, which I think will probably be lower than it was in the past, but we'll still see some level of leverage on those plays going forward once we see how they perform after the halving. So that's a lot to say. Yes, I do think there's still going to be a leveraged play on Bitcoin. I don't think it will be as exaggerated. I do think there will be winners and losers in the mining space. And this is not financial advice nor a suggestion to buy, sell, or hold any assets whatsoever. But what I am looking for when I'm looking for miners that will continue to have that leveraged exposure is I'm looking for a minimum of a doubling of their exahash from the previous Bitcoin cycle. Okay, looking for that. Looking for energy costs, below 9 cents a kilowatt hour, preferably closer to 5 or 4 or even lower cents per kilowatt hour on their energy costs. I'm looking for a Bitcoin treasury, preferably, 1,000 or more, but it can be smaller for smaller miners. Like I hold Bitfarms and BitDigital. They have less than 1,000, but they're getting close to that. And those are the factors that I'm taking into consideration. I'm saying, okay, which one of these is still going to be a leveraged play going forward versus just, a Bitcoin miner that kind of performs and perhaps doesn't outperform. So that is the, I guess, the short answer to this longer video. And with that said, please like, comment, and subscribe, and have a fruitful day.